All right, let's start with why you need to invest with one chart to guide you through the volatile times in markets and investing. Here it is. Is this time different? The U.S. unemployment rate has climbed to 4.3% in July, the highest level since October 2021. While it remains below the historical average of 5.7%, it's now 0.9% above the cycle low from April 2023, which was 3.4%. Historically, a recession has started on average 3 months before such a 0.9% rise in the unemployment rate. This brings us to the key question for investors and the Fed. Are we on the verge of a recession today, or is this time different? The biggest correction of the year. U.S. stocks showed no signs of pricing in any recessionary scenario in mid-July, with valuations at their highest level since 2000, and the S&P 500 index up 20% for the year. But within a few weeks, much changed. From peak to trough, the S&P 500 declined 9.7% from its July all-time high to its low today, marking the biggest correction of the year. This decline is normal. Volatility is a feature, not a bug, of equity markets. Without it, there would be no higher reward than sitting in cash. The price for the S&P 500's long-term return of 10% is enduring many drawdowns. The current 8.5% drawdown on a closing basis is just the latest test, and it's mild, given the median intra-year drawdown since 1928 is minus 13%. Embracing panic. The Nikkei 225 falling 12.4%, the second largest decline in history, only surpassed by the 14.9% fall during the October 1987 crash. What happened after the 1987 crash? The Nikkei 225 rose 26.5% in the following year. Those who embraced panic were rewarded. The same was true after the declines during the global financial crisis in October 2008 and the earthquake tsunami in March 2011. The Nikkei's two-day decline of minus 17.5% is the largest in its history, surpassing even the 1987 crash. This wiped out the 26% gain it had a few weeks ago, shifting sentiment from bullish to bearish almost instantly. Volatility returns with a vengeance. For much of this year, U.S. equities enjoyed an incredibly smooth ride higher with little volatility. But that narrative is over, with the VIX spiking 65% to close at 38.57, the second largest one-day increase in the volatility index ever, and the highest close since October 2020. The VIX hit 65.73 during the morning panic, a level not seen since March 2020. An emergency rate cut? As seen in March 2020, market turmoil can rapidly change expectations for Fed policy moves. After the FOMC meeting last Wednesday, markets were pricing in a 25 basis points rate cut in September. The weak employment report last Friday shifted the odds to a higher probability of a 50 basis points cut. With today's VIX spike, markets now fully expect a 50 basis points cut and even consider a 75 basis points cut. Jeremy Siegel called for an emergency 75 basis points cut immediately, followed by another 75 basis points cut in September. However, caution is warranted. Aggressive easing driven by recession fears may not be the solution hoped for, as seen in September 2007 and January 2001. Bonds are acting like a hedge again. Stocks are falling, and so are interest rates, unlike the past 3 years when inflation and rising rates were the main concerns. Now, fears have shifted to the economy and a potential recession. The Fed is expected to cut rates by over 100 basis points by year-end, causing yields to fall sharply. The 10-year Treasury yield ended last week at 3.80%, down from 4.71% in April, and the 2-year Treasury yield fell to 3.88%, its lowest since May 2023. This decline in rates has pushed U.S. bonds up 2% since July 16, while the S&P 500 is down over 8% and the Nasdaq 100 down over 12%. The aggregate bond ETF, ticker symbol AGG, is up 7.7% over the past year, outperforming Treasury bills, ticker symbol BILL, which are up 5.4%. Another ignominious debt milestone. It's official. The U.S. national debt has surpassed $35 trillion for the first time, $13 trillion higher than 5 years ago, a 59% increase. Where will it go from here? Likely much higher, as there's no political will to reduce the massive deficits we've been running year after year. And this is happening with the economy still in expansion. Imagine what will happen to the national debt during the next recession. With 58% of companies reported, S&P 500 operating EPS are up 3% year-over-year, the slowest growth rate since Q4 2022. Here's a summary of last week's Magnificent 7 results. Microsoft, ticker symbol MSFT. Revenues up 15% year-over-year to a record high of $64.7 billion. Net income grew 10% year-over-year to $22 billion, the second highest quarter ever. Meta, ticker symbol Meta. Revenues up 22% year-over-year to a new Q2 high of $39 billion. Net income up 73% year-over-year to a new Q2 high of $13.5 billion. Operating margins increased to 38% from 29%. Amazon, ticker symbol AMZN. Revenues up 10% year-over-year to a new Q2 record of $148 billion. Net income up 101% year-over-year to $13.5 billion, the second highest quarterly profit to date. Operating margins increased to 9.9% from 5.7%. Apple, ticker symbol AAPL. Revenues up 5% year-over-year to $85.8 billion, a record high for Q2 and highest growth rate since Q3 2022. Net income grew 8% year-over-year to $21.4 billion. Operating margins increased to 30% from 28%. More affordable rents. U.S. asking rents dropped 0.8% over the past year, marking the 14th consecutive month of year-over-year decline. Rising vacancies due to a boom in multifamily construction have driven rents down. Asking rents are now 2% below levels from 2 years ago, while average hourly earnings have increased by over 8%, making rents more affordable for the average American. A few interesting stats. How much is a gold medal worth? It depends on the country. 17% of 25 to 35-year-olds in the U.S. now live with their parents, the highest share since the period following the Great Depression in 1940. The longest yield curve inversion in history, 758 days, is nearing its end, with the 10-year Treasury yield now only 0.08% lower than the 2-year Treasury yield. Historically, this flip back to a positive curve has occurred near the start of a recession. The ISM manufacturing PMI has been below 50, indicating contraction, for 20 out of the last 21 months. This has only happened once before, from 1989 to 1991, during the recession in 1990-1991. Meta's Reality Labs unit lost another $4.5 billion in Q2, bringing its cumulative losses since 2020 to $50 billion. That's it for today. I hope it was useful. I'll see you guys again very, very soon. Later.